So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. 50 pips, rocking and rolling here, 27th of March, 2023. No trade calls, no recommendations, responsible and stuff. We're here for educational purposes only. So, hope everybody's having a great day. Nothing's off deck. Any question anybody may have, just ask along, and I'll tackle it. Let's see what gives, and we'll just go on. I mean, there's no real plan. There's no schedule. There's nothing I want to go through. I'll just stay on as long as people have questions. More than happy to tackle any questions and chit chat on some charts. Okay, so what's going on? Hey, Nick, massive hello. Wow, what a good surprise. See, it's always worth doing these live things. You never know what old friend will pop into the picture. Good to see you. Good to see you. Hope everything's fine. Let's get cracking. So what's going on? What's going on? As I give people a chance to ask questions, if anybody has any question they want to ask, I'll go through, what probably are the most interesting things and what's going on here. Now, clearly, we've got an interesting week. We've got a lot of data out all week. Most importantly will likely be the core PCE on Friday. That'll be the, hey Stefan, will be the interesting thing to keep an eye out for. The other thing I would keep an eye out for, don't forget that it's the end of the month, the end of the quarter. So we'll see month and quarter end flows going through, not uncommon to see an end of month, end of quarter pump on Friday. Now, everybody's looking for the world to end. Usually you got to be a little bit careful that kind of signals there's probably some kind of a bounce coming as we're discussing these past weeks. And again, we have to be a little bit patient. What's interesting here is that we're going in a situation where as we head into April tends to be actually quite a bullish month, right? Seasonally, quite a bullish month. And also in pre-election years, April tends to be really hot, right? So is that something to keep in mind? So the question is, if here people kind of relax a little bit, all the panic on the banks, are we setting up for some kind of a strong April, May, and then, puke as we go into the summer months? Something interesting to keep in mind. We could always get some kind of headlines across the board, but bottom line, I think the market is still choppy. We'll probably see range trading. We'll probably see a market that is remains tactical, and where you want to be very, very tactical. I wouldn't want to hold any really overnight risk. And again, keep in mind that even though everybody's calling for, especially non-EU people calling for EU banks to implode, this is nothing like, 2008. European banks are in a much, much, much more solid position than they were before, at least for now. Never know, famous last words. But I really wouldn't expect a repeat of 208 kind of thing in terms of banks. So right now here, also the central bankers, the other thing to keep in mind is listen to what the central banks are saying, right? And what they're saying is, again, inflation continues to be main concern, and they still have a lot to do on inflation. So especially if this little panic goes by and the data stays strong, you saw the UK data, they're going to keep on, as they said, higher for longer, rates higher, and once we get there, they're going to stay high for a while. So as we've been saying, I think all these past months in terms of these live streams too, and as we've been discussing in the daily webinars is, whether you like it or not, they're telling you asset prices lower, rates higher. Then it's up to you if you want to fight it, or if you want to take the easier trade. It's quite funny that everybody loves the don't fight the Fed when the market is going up, but when it's going down, all of a sudden you're allowed to fight the Fed. So let's see what's going on. Let's see some questions. Want to take a look at gold. Dumping coming with rate continues to rise. Good morning. Hey man, how's it going, Andres? You see many short opportunities today? Well, let's see. If you have any chart you want me to look at, shoot. So what's going on gold? On gold, we've had very, very nice trading on gold recently, right? Not only, I think, Stefan, we discussed this, you're always in these live streams. We had the beautiful kind of usual seasonal trade in gold, right? Which is basically trying to get long in December into the last FOMC meeting of the year and ride it into Jan-Feb, and that was a beautiful little pump, right? Then here we got this nice daily reversal protection of the 2000 mark, and we got a little bit of a retracement. And all things being equal, this is extremely technical move because you can see off these lows, basically, we came back, retraced into the confluence of these moving averages, the 1800, which is a pivotal level we've been discussing, the 50 back of the move from A to B, and then full extension. Now here we've stalled at the 2000 and just ahead of the 123 mark. So if you're a fib lover, you'd probably want to fib this move now, extend your fib to the new high. But I don't think it's really, I wouldn't be too focused on the fibs here. I would draw your attention back to the weekly. And this is a big range we've been discussing and trading for a while. And here it's very hard to be aggressively long gold against this weekly reversal into the 2000 based on how the market is traded. So technically there is no way you would really want to be aggressively long gold here. Even if you were bullish, you would see this as that was that 50 back hold into the 123. You would expect to see if the market is going to behave in in an orderly fashion for us to come back down, maybe back into the 50 week, hold these series of lower highs, higher lows and higher highs, and then extend higher, right? If you're looking at being very, very technical. I think this is still a range trade. However, do you really want to be aggressively short gold into this environment, with all the headline risk? Probably not, right? Probably not if you're talking about a structural trade. If you're talking about a technical trade, there's absolutely nothing wrong with that because you see, basically, we actually took this. This is just a trigger, right? Short at the 2000, failure of the 2000, stop above previous highs, cover TP1, 50% of your position or more to cover the size of your stop. You just bought yourself a free option on that move back into the 10-week moving average if you want to. You see what I mean? So you can trade it tactically, but structurally, I really wouldn't want to be building new longs here. Are we going to see a puke coming? It really depends, right? It's always a big question because as long as the market stays bid, but there's Russia risk, banking risk, yada yada yada. You're probably going to see plenty of demand for gold, right? So I don't think it's. I wouldn't necessarily be looking for gold to puke and die. I think gold is probably hovering here quite comfortable at these highs. It's an interesting level for people who want to be tactically short, and for gold bugs, again, even though they're permanently disappointed, this is an ideal condition to hold gold. So I really don't see, unless all this headline risk goes, any reason for gold to trade back below this pivotal level around the 1875 level, that you can use that 10-week moving average. So it's still hovering here, right? And all things being equal, it's very comfortable inside this broader range. And unless something truly spectacular happens, it's probably going to continue to trade inside this range. Does that make sense, Stefan? I don't know if you have other questions, but clearly, technically, you'd be looking for a move back into that 10-week. Now, all things being equal, this is, I know all the people who are looking for big moves continue to be upset, but this is quite poetic because really this is stuck inside this beautiful range. If you go and you look at the ES, Stefan, also, we've been talking about this for ages. Everybody's looking for break up, break down, disaster here, disaster there. And we said, what would probably mess most people up is for us to stay in this broader range for a very, very long time and upset everybody. I mean, I'll continue to say, if we stay in this range and don't move, more power to it. I mean, for aggressive traders, this is beautiful, beautiful range to trade. And also this is stuck. We really need a big catalyst, something very, very different that the market has to price in for these to really move out of ranges, right? And what's happening with NVIDIA? I mean, NVIDIA, this, NVIDIA is It's poster child for current situation where we are, right? So you always want to be long NVIDIA. I mean, all things being equal, we've discussed this for a long time. I think the no-brainer trade is to have, long NVIDIA, short Intel or something like that. But, everything is trading together, right? Look at it this way. So basically what happened, everybody started to panic a little bit, but people want to stay invested, right? So what do? You rotate out of the shitcos, Russell. You rotate out of the banks, big banks and regional banks, YM and Russell. What do you do if you want to stay invested? Well, of course, you rotate into tech. Right? So you're buying tech. So it's not a question of being crazy and buying tech. It's just if you want to be, and remember, ultimately rotations inside the different indices, people who are bearish look at a rotation out of one of the four, right? And they'll say, ES, YM, Russell, and NASDAQ, oh, look, that one's going down, so everything has to crumble, right? But what you got to learn is that usually when you see rotations are actually bullish for the market because it just means that the market wants to stay invested and it's just moving, right? And so there's nothing crazy going on. For things to get ugly, you need to see everybody want to sell everything. Does that make sense? Yeah, you want to see everything sold, people buying yen, people buying gold, people buying bonds. That's a true flight to safety, not rotation out of tech into value, out of value into growth. That's still a market that's looking to be active, that's looking to be invested. So here what's happened is you've got a situation where with this crisis, people rotated out of YM and Russell and back into tech. Right? So all the tech names are staying strong. So here the question is, as long as the situation doesn't really deteriorate, you're probably going to see tech continue to outperform. Then the question is there some kind of trade to play for these rotations? So is there some kind of pairs trade, right? So for example, if the headline risk is gone on financials, is an interesting trade to not have a naked position to short NASDAQ and get long YM or Russell tactically for a little bit of that, the money to come out of tech and get back into those sectors that completely sold off. And you don't need people to go wildly buying YM or Russell, but it could just be people moving from overweight to neutral, underweight to neutral, and you see those moves. So I think here, if you don't want to take any huge naked directional risk, it makes sense to look at some pairs trade. But to go back in your question, it's all the same trade, right? Look at these, NVIDIA, let's look at them on the weekly, right? NVIDIA back at those highs, Facebook coiling, Microsoft back at those highs, Google back into those highs, Amazon a little bit heavier, Apple back to those highs. So you see it's the same trade across the board. So here, I wouldn't be overthinking it. I don't think you've got a lot of edge here looking at a single name. It's just everything is moving in sync. Does that make sense? Getting Nortel 201 vibes from NVIDIA. I mean, I don't know. I think the situation is very, very different to 2000s. Again, would I be buying tech hand over fist here? Absolutely not. Do I think there's an interesting short right here in tech or possibly setting up? Sure. But, I'm not a big fan of analogs and stuff like that. I'll just trade each chart independently. But for example, if you look at NASDAQ, right? So basically, the range we've been working with on the NASDAQ is basically 13,000, 12,000, and 11,000, okay? So you see that this 200 DMA coming in line with the 12,000. You can see that's kind of like that 3950 on ES. Does that make sense? So what you're seeing here is, as we said, if you're looking at those rotations, you see how ES is still kind of middle of that range, YM middle of that range, Russell smack down as you're seeing those rotations, and you've got that NASDAQ that is the top end of that range, right? So if you want to be, if you're looking for shorts on NASDAQ, I mean, this is not an uninteresting place, right? You could already be short or be looking for any tactical weakness to get short with a stop above these highs, looking for this 13,000 to hold. And as I said, you could just see a little bit of rotation back into some of the stuff that's being sold, and maybe that takes NASDAQ back into the 12,000. Everybody's going to get all bearish, and then it gets stuck here, right? Everybody gets upset again, and NASDAQ holds 12,000, ES holds 3950, right? Everything continues to hold neutral in these ranges with nothing really happening, because we need to get through this headline risk. We have to understand if the Fed is going to, is going for 5.5 install. Are they going to have to go for 6, 7, whatever, right? So it's all data dependent. So as long as the data doesn't give us a reason to really change what the market is pricing in, look for a lot of chop. And remember, everybody gets excited with one data point, right? Or slightly some inflation number coming slightly higher, slightly lower. Remember, the Fed has told us what they want to see, is either, 2 or 3 consecutive weak numbers, 2 or 3 consecutive higher numbers, right? To really change past. As long as we're kind of hovering around there, just above, just below, it's not enough to really change. So I'd really urge people not to get too excited too quickly. Think of the bigger picture, and inflation's still there, data's still hot, so we're likely going to see more of the same unless things really, really change, right? So again, there may be some interesting trades here, but it's a lot of chop, broadly speaking, right? It's a lot of chop, broadly speaking, and everything is pretty much moving in sync. So I don't see anything crazy happening. I mean, ideally, if we get a stupid squeeze here in the next month or so, that could set up some nice swing trades. But for here, it doesn't really look like there's a God's gift to swingers. Okay. So another thing with a lot of people have been talking about, I mean, if you look at the 10-year, let's look at see what's happening. This is going to be an interesting one to keep an eye on here. So basically, whether you're looking at the I mean, if you're trying to get big and you're trying to play for a smaller data point or a headline here or there for a trend change, you're gotten killed, right? So what you want to look here on the bonds is you can see this as a very interesting level, whether you're looking at, you can use this 200 DMA, whether you're looking at ZBs, UBs, or ZNs, we're kind of hovering above these 200s, right? Around these 200s. And this is a very interesting level also for positioning and kind of like flip the switch kind of trades. So remember here, even though you might be tempted in getting short, be very, very careful. As long as we're holding above the 114, you've got a confluence of these moving averages. You've got this breakout zone. This is really the pivotal level, right? This is really the pivotal level. This is really no man's land. So what's going to be interesting for me here, is if we can come back down, is either, to play for this move, right? That's maybe where we set up a broader swing move. That's going to be very, very interesting. But especially if these headlines start to dampen and, crisis kind of averted, move back below the 200, back below the 114, back below this pivotal zone. This would be a very interesting trade, even a quick Momo trade, to take out all these levels to the downside and trying to reaccelerate lower. Now, hey, Water Shambles, how's it going? Something which you can look at, and a lot of people like to look at, is to get a feel for how those are going to trade, is to keep an eye on the Bund. And here you can see, the Bund is still holding well below that 200. You've still got this reversal here that's holding. And now we'll have to see. But as discussed on a lot of those other trades, basically, as long as we're kind of inside this broader range now, it means nothing. So this is, don't get confused by velocity of move inside this area. And what that means is, a lot of people can run around like headless chickens on a little bit of a move up or a little bit of a move down. But really, unless you get a day close back above the 200 DMA or you get a day close back below the 50 DMA, this is likely just going to be, hunting stops and taking people out left, right, and center. But outside of those ranges, then we probably see some very, very interesting action and something which is, swingable, multi-day, multi-week move. Unless we get out of that, I really think you have to be in a tactical mindset. Okay, tactical mindset, not getting too excited, just happy to play the ranges, happy to play the extremes, sell the range highs, buy the range lows, look to fade if things get a little bit out of whack on the day, but just be very, very tactical. Any comments, any questions, anything anybody wants to look at? Again, no charts off limits. We can look at anything anybody wants to look at. Crude, something which is interesting in crude. I don't know if Nick has an opinion here, but this is getting shwabammed, right? We talked about the fact that essentially it seems like headlines are more than happy to smack this down at the 80, and we'd expect to see some kind of whether it's a Washington bid or something sub 70. And apart from that, a lot of choppy action. Here it's hovering at the 10-day. Now, what I think is interesting here is to keep an eye on the weekly action, right? So if you go back on the weekly, you see that basically we just put in a green reversal candle at the 200 week. So this is a very, very interesting location for a bounce if we're going to get one. Again, I'm not a huge fan of trading crude, but I would be careful trying to get aggressively short here. This is an interesting place. So what I would say is, especially because of the action there on the weekly, is keep an eye on how we close around this 10-day moving average and around this psychological 70 mark, right? Because here, the longer we hover here and the longer we hold below the 70 mark without being able to attract new sellers at lows, this could be a little bit of ball underwater action. And, especially if you see everything rallying, if you see maybe stocks catch a bid in April, this could be an interesting location to look for a move back into the 80 mark, right? Again, a move back into the 80 mark wouldn't mean necessarily that that we're going back to 100, right? We could just still be stuck inside this choppy zone as we're seeing in the NASDAQ and the ES and in gold. But I would be careful getting aggressively short here. 70 is a tough resistance for crude, or 72. Yeah, I mean, here it's a really interesting trade, and again, you see that the market is those highs there where it got smacked was the 7160 kind of level. You've got basically a lot of areas here basically protecting that kind of 72. You have these lows, these previous supports that acting as resistance. Here you also have this previous support that now is acting as resistance here. I think a good guide that I like to use when there's no super clear horizontal level is the 10-day. It kind of gives you a good idea for who's fighting for what. And here you see that the 10-day keeps on being defended, right? Once we popped up, bam, got smacked, bam, got smacked, bam, got smacked, even though never want to be short crude on a Friday, right? Tried to rally it, but they still closed it below that 10-day. So again, as long as we close below, that 10-day, it's really, really heavy. But I tend to like these locations for tactical trades because that when we're trading like this, you've got a lot of stops building, right? And that doesn't have to be only to the upside. You got stops building to the upside and stops building to the downside. So here, the market can really catch its breath and then really play for an explosive move to the upside or the downside. This is similar like the other chart we're discussing. And I would say is don't get confused by velocity of move inside range because it likely doesn't mean much. Because here, if you're long and you think the low is in, there is no way you're going to give up on this trade unless we print new lows, right? If you're short and you sold the smackdown, you're probably not going to even think about covering unless we trade back above those highs, day close back above the 10-day. Probably the shorts are really not going to give up unless we trade back above 80, but this is probably another little air pocket zone. So I don't like chasing the Momo trade to the downside, but if we clip these stops to the upside, I think there could be a nice little tactical trade for the 80 mark. Again, not holding my breath. I really don't trade much crude, but I think it's an interesting chart, interesting location. Again, not only because of crude, but as always, these webinars, it's just always fun to talk about charts, talk about dynamics around key levels or key moving averages or key patterns that then people can use for any chart, right? Okay, what else? So we got any other interesting charts? Yeah, one thing here this week, I think something which is interesting, of course, that you kind of have to have your eye out for, which you can kind of look as a control chart. A lot of people saying, oh, you need to look at SQ, you need to look at Coinbase, yada, yada, yada. I think here really the control chart is something like any kind of, you can look at XLF, or I like to look at KRE. And basically, this is what you want to focus on. As long as KRE can't catch a bid and you see aggressive selling coming in there, especially at specific times of day, it's really, really tricky, right? It's really, really tricky. The market's going to have a hard time struggling. At best, you'll see people continuing to pile into tech as they move out of YM and Russell. But here, keep a close eye on this because, this could easily rip a lot and still look like doo-doo, right? This could still rip a lot and still get smacked down, right? But here, bottom line is there's a lot of room to run with tactical buyers that are going to come in and people who got caught shorting the lows because they saw on TV that, this is going to zero because it's the end of the world. So again, I think this is an interesting control chart. And remember, there are a lot of gaps to fill to the upside and a lot of pop potential. And if you see that pop, you probably want to lay off those shorts, unless you want to put on some kind of pairs trade. As I said, short NASDAQ, long Russell, short some other sector, long the banks. Not a trade I'm particularly interested in. I prefer to look at this just in terms of risk sentiment, but I think this is going to be an interesting control chart for the week. For the week, definitely. Crude. Let's go back. So crude. So you're talking about the 20 MA. Yeah. Here, we've got that 200 on. And that's an interesting level because also if you go back, this is an area where we've seen a lot of action here. Really interesting. Both support and resistance. So I think it makes sense that we're not going to go knife through butter here. So as I said, I think that's what, if we're going to get a bounce, this is an interesting location for a bounce. It doesn't mean we're really out of trouble here unless we really get back above this whole zone. But, it's an interesting one. Equally, if we start clipping stops below these lows, and who's going to want to catch this, right? This could really go much lower towards print in the 50s easily, right? So it's definitely an interesting location, interesting chart to keep an eye out for in terms of interesting charts. What else have we got in terms of interesting charts? Nobody's asked about DXY, so let's look at the DXY. So basically DXY, the way we're looking at DXY hasn't really changed. Our base case, uranium, wait for a headline, right? Change on URE, URA is really a poor way of looking at expressing the uranium trade, but it's an interesting way. I've been on this trade for ages. I've been on this trade, I don't know, since 1920, I don't know, ages. But anyway, our base case assumption, this was from our initial, our base case assumption, we're buying this around the 10s, was neutral, 20, primary, 40, extension, 70, right? This is kind of roadmap we had. So this trade is still in play. It's clearly far less interesting at 20 than it was at 10, but it's still interesting, right? It's still interesting. And here the problem is there's not much to do. You just have to wait for a headline, right? And the problem is anything inside here is velocity of move. And you can keep a close eye on this and you'll see this is, unless there's a headline, this will trade with risk, right? It will 100% trade with risk. So going back with, to DXY. What's going on DXY? Well, DXY, basically, we've been working with this range in the DXY, which is 103, 106, 109, and neutral being the 106. So think 12K NASDAQ, 3950 ES, etc., right? All those 200 DMAs. And right now, the big question is, are we attempting a range break or not? Here we had a false attempt to break lower, and here we're coming right back down. Now, this broke the 50 back, so this is looking a little bit heavy. Usually when you see this kind of action, right, lows to highs, when you see this trying to front run the 50 back, and then it breaks, high odds it clears the 61.8. And here it's the 78.6 that's holding, so harmonic traders, Elliott waivers and stuff are probably going to like this level. But right here, basically what's interesting is how we trade around the 103, right? That's the key level. So below the 103, this really opens up the potential for a retest sub 100. And as long as it keeps on holding here above the 103, it's on any kind of headline, anything moving is that 106 attracts, and that for now is neutral. If you're looking at this on the weekly, what do we need to see for a range break, confirmed range break? Really, I want to see a low below this candle, below this weekly range. So for now, we're still holding. So it's just a little bit messy here. We'll have to see how we tackle these headlines. It's going to be interesting to see how we go through month-end flows, quarter-end flows. But right now, it's still kind of hovering here. I mean, keep in mind that as long as the situation on the bank doesn't ease, you would expect to see money looking for gold, dollar, bonds, right? But that's where we are. I mean, at least we have fairly defined levels across the board. So we'll have to be a little bit patient. What's going on the euro? Euro, nothing much is going on the euro. Our range on euro was 105, 110. I mean, we've been structurally long euro. Every time people start screaming, die euro, die, we're going to zero, that's the time to get long. And right now, if you think about it logically, the ECB still has a long way to go. They're behind the ball versus the Fed. So you'd expect that irrespective of what happens longer term, 3-6 months down the line, you'd think euro higher, you want to be structurally long euro against the dollar. Could we see a lot of wheeling and dealing here and there on headlines? Sure. But you see that, everything's kind of stalling and trying to come back into those 200 DMAs, 105. That would be kind of the neutral level. So we're still seeing a lot of range trade. So as I said, since the end of last year, beginning of this year, coming to this year, I said, don't get excited looking for extensions away and trend trades using the 200 DMA. Look for stuff to stay in range and look for stuff to come back towards those DMAs, those 200 DMAs every time we fail at key levels on extensions, because unless something drastically changes, we're likely going to see markets stay in broader ranges for the whole year. And all things being equal, that's a beautiful kind of action for people who trade every day, right? Much nicer. You can get away with murder. Market keeps on coming back, staying in ranges. It's far easier to get clobbered on the wrong side of the slow trend higher, slow trend lower that never turns back than stuff staying in range. So, comments, questions, anything anybody's looking at, anything anybody wants to discuss? We've been going for about, I think, 30 minutes, over 30 minutes. Happy to stay on if anybody has questions. If not, we'll call it a day and do this again next month or something like that. Bitcoin, what's going on Bitcoin? I was surprised you didn't ask me about Ethereum yet. What's going on Bitcoin? Here, basically, again, you'd expect this ultimately to trade with risk. And what you've seen is we caught that bid and we've come back, pretty much fill this gap. So right now, basically, I think this is just going to continue to trade in risk. Do I necessarily want to be aggressively long Bitcoin as a trading position with all the headlines that could hit? Not really, right? Don't forget, Mark Cahodes is picked. Well, some people have picked the fight with the wrong person. So Mark's likely going to bring a spotlight to a lot of these, perma pumpers. So you could get some ugly headlines hitting. So you want to be a little bit careful. Does that mean that changes my view on anything you've got, on your ledger? No. But on trading, I would be a little bit careful on the long side. I suspect this is ultimately going to trade with risk, and it's just a liquidity trade for now, right? But ultimately, unless something drastic happens, if there's panic in general, and if rates are staying higher, the case for Bitcoin is far less compelling. Here, technically, I think what you want to watch is, how we trade around this gap fill level, right? You've got this here and basically this little high here. So this acts as an important overhead support here. And right now you've got that open gap to the downside of the 21,000 coming in line with the 200 DMA. So basically it's the bottom end and top end. So for me, I would look at this as just a range as long as it's not. If it breaks to the upside, chances are something big has happened, and I wouldn't be surprised to see this print 40,000s and, catch a strong bid. But right here, I think it's just, it's not that interesting here, right? It's not that interesting for a number of reasons. So again, don't think I can add that much. I'd just be looking at those upside gap, downside gap as kind of fixing some kind of a range. But, no big, I'd just be careful with potential headline risk on the whole crypto sector here in general, which is very different to, if you're holding long-term positions and, you've got stuff, you're holding stuff on your own ledger at home, etc. Okay. Okay, guys. Well, let's call it a wrap. Thank you so much for hanging around with me a little bit, Nick. Really nice to see you. Been a long time. Hope you're feeling better. Hope you're doing good. And everybody else, thanks, usual suspects, for showing up. Let's do it again soon. And let's see. Mark Cahodes and the debanking of crypto in the U.S. is forcing crypto treasuries back into Bitcoin, the original stable coin. Short alts, but not Bitcoin. Yeah, it makes sense. Hopefully, anything that Mark can do, I think whether you think these guys are pumpers and they need to be punished, or if you want this, if you really believe in the sector and you want it to get cleaned up, is good, right? So again, I think it doesn't really change any long-term view on Bitcoin, right? But I think the problem is that it's going to be, for the next big pump on Bitcoin, we're probably going to need to have a more of a general optimism, right? And a little bit more of institutional flow coming back. And as long as things aren't cleaned up, you're likely not going to see that. So if anything, hopefully if things get shaken up, if Bitcoin, I'd expect it to do, of course, much better than everything else. But if it suffers a little bit as a consequence of the whole sector taking a spanking, then that's probably going to be a beautiful opportunity to buy some up and put it on your ledger, right? So let's see what gives, guys. Thank you so much. Fun hanging around with you guys. Have a great one. Talk to you guys soon, and all the best. Take care, guys. Bye-bye.